A condo that sold for over $500,000 in Hamilton just a few years ago is now sitting on the market at $462,000, and it's still not moving. That's not a typo. The average condo price in Hamilton dropped 9.6% year over year as of December 2025. And that's just the average. Some units are sitting there for weeks, months, with barely a single showing. According to Urbanation, one of Canada's most respected real estate research firms, new condo sales across the Greater Toronto-Hamilton area just hit their lowest level since 1991. We're talking about a 95% collapse from the 2021 peak. 95%. And here's what makes this different from a regular market slowdown. This isn't just about interest rates. Something structurally broke, and it started way before most people noticed. Let's break down exactly what happened, who got burned, and what it means for anyone watching this market right now. To understand what's happening in Hamilton today, you have to go back to 2021. At the peak of the pandemic housing frenzy, condos in Hamilton were flying off the shelf. Investors were snapping up pre-construction units faster than developers could launch them. The logic was simple. Buy early, prices always go up, rent it out, let the tenant cover the mortgage. That was the playbook, and for years it worked. But then 2022 happened. The Bank of Canada started hiking interest rates aggressively to fight inflation, and the math on those condo investments completely fell apart. The rental income that used to cover the mortgage suddenly didn't come close. Carrying costs went through the roof, and prices started to slide. Now here's the part that most people missed. Even as all of this was happening, thousands of condo units that were sold during that 2021 frenzy were still under construction. They were getting completed and hitting the market all throughout 2024 and 2025, right into an environment where nobody wanted to buy them. So you had record levels of supply landing in a market with almost no demand. That combination is what really started the collapse. In Hamilton specifically, apartment-style condo sales fell 38.5% in the spring of 2025 alone, according to the Realtors Association of Hamilton and Burlington. By December of 2025, overall home sales in Hamilton were down 19.8% year over year, and condos were hit hardest of all. If you're watching this and finding it useful, hit that subscribe button. We break down what's actually happening in Canadian real estate with real numbers. New videos every week. Here's the thing about Hamilton's condo market that separates it from detached homes. It ran almost entirely on investor money. Local families buying a place to raise kids. They're looking at houses, townhomes. The condo market, especially those smaller one-bedroom and studio units downtown, was built for investors who plan to rent them out. And now, those investors are gone. Why? Because the numbers don't work anymore. The average rent in Hamilton is around $2,075 a month as of late 2025. But if you bought a typical condo at the 2021 peak with a small down payment, your mortgage payments, condo fees, property taxes, and insurance are eating up way more than that every single month. You're losing money just by holding the property. A Globe and Mail report from February 2026 told the story of a couple who bought a two-bedroom condo for $520,000 in 2021. By 2025, they couldn't afford to sell. The market had dropped so far that they would have had to bring a check to the closing table just to get out. So instead, they're renting it out for $2,400 a month, which, as they told the reporter directly, doesn't come close to covering our overhead costs. They're bleeding cash every single month just to avoid locking a loss. That story isn't unique. It's playing out across Hamilton in hundreds of units right now. And because investors have pulled back, developers have no one to sell to. According to Urbanation's January 2026 report, developers launched only 10 new condo projects across the entire Greater Toronto-Hamilton area in all of 2025. Of those, only 22% of units sold, compared to 81% in 2021. They're slashing prices, offering cashback credits at closing, covering closing costs, extending deposit schedules, and buyers still aren't showing up. When developers can't sell units, eventually they stop building them. And that's exactly what's happening. But the scale of it is something we've never seen before. In 2025 alone, A record 28 active condo projects were canceled across the Greater Toronto-Hamilton area. That's 7,243 units gone, never going to be built. And that number more than doubled the previous record set in 2018. According to CMHC's 2026 Housing Market Outlook, Hamilton's condo market specifically is facing weaker absorption, which is a polished way of saying too many units, not enough buyers. Central Hamilton, where investor demand has dried up the most, is expected to underperform the rest of the region for the foreseeable future. Here's where this gets complicated, because there are two very different problems happening at the same time. Right now, there's too much supply. Thousands of units that were built during the boom years are sitting unsold or empty. Sellers are competing against each other, prices are drifting lower, and buyers who do exist have all the leverage. But look 5 years out, and the picture flips completely, because all those cancellations, all those projects that got shelved, that's supply that will never hit the market. Urbanation has already said something remarkable. By 2029, there will be virtually zero new condo completions in this region. Zero. The pipeline is empty. Sean Hildebrand, president of Urbanation, put it plainly in January 2026. By the end of the decade, we know with certainty that there won't be any new condo completions. What we don't know is how far into the 2030s the supply crunch will last. So today's problem is too much supply. Tomorrow's problem is the exact opposite. And whoever navigates that gap correctly is going to be in a very different position from everyone who panicked or ignored it. As of early 2026, the Hamilton condo market is still very much in correction mode. The average condo is now selling for $462,400. That's down nearly 10% from a year ago. Sales volumes are down. Days on market are up. And the buyers who are out there know they have options, so they're negotiating hard. The Bank of Canada has cut its policy rate down to 2.25%, which is meaningfully lower than where it was a year ago. That has helped on the affordability side. But lower rates alone haven't been enough to bring buyers rushing back into condos specifically, because the bigger issue isn't the cost of borrowing. It's confidence. People watch their friends lose money on condos. They saw the cancellations. They saw the prices drop. And they're in no hurry. CMHC's forecast says Hamilton sales are expected to gradually improve through 2026, but prices are expected to stay flat. The average home price, which dropped to around $725,200 in December 2025 for all property types, is unlikely to see meaningful growth this year. For first-time buyers, condos are actually more accessible than they've been in several years. But even at $462,000, that benchmark is still above what a median-income household in Hamilton can comfortably finance without significant help. So here's where this whole story lands. Hamilton's condo market didn't collapse because of one thing. It was a chain reaction. Rates went up, investor math broke. Buyers stepped back, supply piled up, cancellations hit records, and now the market is slowly, painfully working through all of that. The people who are hurting the most right now are the ones who bought at the peak expecting prices to keep climbing and are now stuck holding units they can't sell without taking a serious loss in a rental market that doesn't cover their costs. The open question is what happens on the other side of this. Because when the supply crunch hits in the late 2020s, and according to Urbanation, this same market that looks quiet and oversupplied today could look very different in a few years. No one expected it to unravel this fast. And right now, everyone is watching very closely to see what comes next.